We are starting today 2021 General Study third paper and area is the Indian economy. Indian economy, which is always toughest area for our all students. As you know, students, a number of students go through these mains examinations, but they are getting very less marks in paper third. Why? They are not understanding the technicality of that topic. Technically, economics, if you try to analyze, is not only based on the fact and you can't cram this topic. Actually, you have to understand the economy like physics. It is based on theory, principle, etc. And as I give you the analysis of this topic, and you will see some extent, if you very clear about the concept, you can write down a good answer in exact word limit within the time limit, and you will get the maximum marks. The basic problem is what? Student always confuse how we should write, how many words we should use in introduction, expansion, conclusion, what should be the word speed limit, etc. They are always confusing. That is why I give you the best technique, best methodology, best strategy under my YouTube channel, the Economica IAS, the Economica IAS. Under this YouTube channel, you will see we are going to analyze 2015 onward mains GS economic questions, and similarly since 2015 preliminary questions, and later on we will predict the questions for 2024 from basic economy and current economy separately. Current economy. And if you are further interested to understand the complete economy, you can join our classes, English medium classes 4 to 6 p.m. 4 to 6 p.m. in offline mode, online mode, or hybrid mode, whatever you like to do, you can do under my guidance, as I teaching the students since last 25 years, and more a number of students, I doesn't like to quote the name here. When you will come in the class, you will see I am teaching and getting, they are perfecting in economy. Ultimate difficulty where the students are facing, that is the technical area economy. Now I start. First you go through these questions, explain the difference between computing methodology of India's gross domestic product, or shortly you will say GDP, before 2015 and after 2015. Question is simple. This question is asking computing methodology. But for the explanation of computing methodology, students, you should also clear about the concept of GDP at market price, at fixed price, or GDP at factor cost. First, I explain the content of this topic. Later, I give you how you can briefly write these questions in impressive manner. First of all, you are needed to know what is the meaning of gross domestic product at factor cost or market price. Later on, you will understand what is the major difference done by the government in the computing of national income after the 2015. First on come on the issue of GDP, because first simple gross domestic product at market price is the sum of all final goods or commodity and services which is produced during a financial year, say 1st April to 31st March of the year. During a financial within the domestic territory of a country. What the meaning of domestic territory? In case of India, from Srinagar to Kanyakumari, Silchar to Porbandar, that is our area of domestic territory, all the goods and services final which is produced, if they are calculating at current market price, then it will be known as GDP at market price. And if it is calculating on fixed price or base year price, that is known as GDP gross domestic product at fixed price. And if it is calculated at factor cost, then it is known as GDP at factor cost. Now you have to clear about the three concept: factor cost, market price, and that is the fixed price. Fixed price is what? Base year price. Generally, when we say the fixed price, that is known as base year price. As you know, presently we are using the base year 2011 and 12. When we are going to calculate the price at 2011 and 12, the value of our GDP, that is known as the GDP at fixed price. And if you are going to calculate the factor cost, so then it will be known as GDP at factor cost. What is the difference between market price or factor cost, or fixed price or factor cost? Come on the issue. If we are calculating the GDP at market price, what does it mean? In total output, we are including the tax also. It means first you calculate the cost of production, then the tax, indirect tax imposed by the government, and sometime government giving the subsidy, that will be equal to which one? Gross domestic product at market price. What do you mean by cost price? Means factor payment. Factor payments. As you know, there are the 5 factor of production, namely land, you have to pay the rent to the land; labor, you have to pay the wage to the labor; capital, you have to pay the interest on capital; organization, you have to pay the payment to the organization; and entrepreneur will earn the profit. This is the factor cost. Are you clear? When we are going to calculate the gross domestic product, we have to include what? That is cost of production plus indirect taxes minus subsidy. That will be the value of market price. As you know, if you are going to calculate the GDP at factor cost, means you have to calculate this one. Means if you deduct from the GDP at market price minus indirect taxes plus subsidy, that will be the factor cost. 2 point is clear? There is no confusion. If you are taking the fixed price rather than market price, the similar equation will be there. Means GDP at fixed price will be cost of production plus indirect taxes minus subsidy, or you will say that is the gross domestic product at factor cost. It will be equal to gross domestic product at fixed price minus indirect taxes plus subsidy. 1 point is clear. Now I come on the issue second. What is the second issue? When you are clear about the concept, now you have to understand the difference in the methodology. Before 2015, we are calculating gross domestic product at fixed price. In our economic survey, government are giving the statistics on both fixed price as well as gross domestic product at market price. But since or after 2015, we are calculating gross value added. Gross value added at fixed price. At fixed price. Priorly we are calculating it also at GDP at factor cost also. GDP at factor cost also. Free data is there. But since 2015 onward, we are calculating the gross value added. It means now you have to understand the methods by which we calculate the national income at different level of productivity, that is known as gross value added method, GVA. Gross value added method. Suppose this is our input, this is our output. say this is value addition. VA means value addition. Take the example, in primary activity or agriculture allied sector, suppose input cost is 100 crore. Output, input cost means fertilizer, seeds, pesticides, technical equipment cost, transportation, everything is included in this input cost. And suppose we are producing 500 crore rupees output, it means value addition by the primary activity 400 crore rupees. Suppose this output sell out to the secondary sector industry, and industry by purchasing the different kinds of agriculture produce like sugarcane, wheat, rice, etc. After processing it sell out say 1000 crore rupees, then the value addition by the industry will be 500 rupees. And if this output of industries goes to the tertiary sector, service sector, trade sector, and they purchase is 1000 crore and sell out in 2000 crore rupees, then the value addition by the tertiary sector 1000 crore rupees. In this way, gross value added will be how much? That is 1900 CR. And GDP in output method will be 3500 CR. 3500 crore. It means our GDP on the basis of before 2015 method was 3500 crore. After 2015 it is only 1900 crore. This GVA give the exact picture rather than GDP at factor cost or at fixed price. Now you are clear what is the difference between computing methodology of GDP before 1990, 2015 and after 2015. Before 2015 we are using or we are calculating the GDP by the use of output method, and after, that is before 2015, after 2015 we are calculating this GVA by the gross value added method, by the GDP measuring through gross value added method. Now what is the three major difference in this method? One I clear, that is the methodology. Second, before 2015 we are using the base year 2004 and 5. After 2015 we are using the base year calculation for GDP 2011 and 12. Second difference. Third difference is what, G? The third major difference is that in GVA we are calculating the gross domestic product separately in separate sector, primary, secondary and tertiary. Priorly, for example, in secondary sector we are using industrial index of industrial production for the calculation of manufacturing output, but after this we are calculating it through the GVA method. That kinds of changes are there. Now the concept is very clear to you. What is the major differences? Now come on the issue how you can write a good answer on the basis of this content of the topic. First you go through the structure. In every questions prior to writing, student, you make the structure, that is introduction, expansion, and then conclusion. Your introduction, as you know, 150 is the word limit. In introduction you will use only 10%, say 15 words. In conclusion 15 words, 120 word in your explanation. For the better further classification, you use the two para and subdivide these para, 60 words in the explanations of methodology of GDP accounting before 2015, and similarly 6 words you can use after 2015 methodology explanations. And finally, when you elaborate all these things in different, may make 2 para or 3 para according to your facility. Generally you can write down 2 para, that is better. number first, second. Similarly, two para is there, one para and second para. In one para, what you will define? How we are going to calculate the GDP? Second para, what is its limitations? Third, in second para and two sub para, number first, what is the GVA method? What is the benefit of GVA method? And finally, you will conclude your answer by summarizing these questions according to your question. Now you are a student, very clear. If you are taking interest in this one, again I will say that you should go through my YouTube channel, The Economica IAS. Thank you.